Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Let's shift focus to kind of a year out from now. Remember the power of compounding and how investing in high quality companies right now, perhaps in Fortress North America, because we're going to talk about that, might just be a good option for investors sitting amidst rocky headline news. How can what you do today in evaluating, choosing companies, help you on the road to next year? Luckily today we have the perfect person to put to that question to. Joining us here in studio is Fidelity Portfolio Manager Darren Lekkerkerker. Darren manages Fidelity North American Equity Class, Global Natural Resources Fund, and the equity sub-portfolio of Canadian Balanced. Welcome back, Darren. Great to see you again.
Hey,
How
thanks,
are you?
Pamela. Super happy to be here.
If you don't mind, it's been a wild few months. Always fascinated to see how portfolio managers use volatility ultimately to their advantage, because that's when often they're interesting entry points. What has the last couple of months meant in terms of volatility for your fund?
Yeah, so you know what's funny? If you look at the S&P 500 year to date, it's up 1% in US dollars. So if you looked at the beginning of the year and today, you'd conclude it's a really boring year. But
Right.
as to your question, it's been like super volatile in between, right? Like we saw the massive volatility in January around the DeepSeek news, and then we saw the massive volatility after the April 2nd liberation tariffs announced, which surprised everyone in terms of the magnitude,
the sandwich board.
The sandwich board, the magnitude, the breadth, and the time to implementation. And so what does volatility mean? I think what volatility means is, first off, having a portfolio of high quality companies for me, knowing what you own and knowing what you might want to own. And so as per that last point, my portfolio was positioned, I thought, quite well for tariffs, but stocks went down a lot, including my...
Okay, so you knew they were coming and you had made some, you got ready for it.
Right, yeah. And so I had very little companies that were directly impacted by sort of import or export tariffs. I mostly had services, not goods, and I mostly had non-cyclical companies. Having said that, like stocks went down a lot. And so as per that point, like on what do you do when you manage fund for volatility, I had thought about in advance, what are some of the companies I might want to buy or that I already own that I may want to buy more of if they go down. And so I leaned in. I bought two companies in retail. One I already owned, which was in the US, which was a dollar store retailer, which is impacted in terms of their direct buy and indirect buy from China, Asia, other countries. And a second company was a Canadian company, consumer discretionary retailer, apparel retailer, really good brand. It's winning in the marketplace in both the US and Canada. Got absolutely crushed when the tariffs were announced. Was able to add or buy these companies cheaply. And since we've seen a recovery in the share prices, I think one, they've recovered as the direction of policy has been better or less bad in terms of tariffs. And go ahead.
No. I was just going to ask you more about because direction of policy, I think everyone's trying to figure that out.
Sure.
But as you say, it's the direction, which is not necessarily the details, which is better. Would you call it better?
Yeah, I think it's definitely better than April 2nd, right? I mean, in terms of like the number of tariffs companies, the timing of implementation, the percentage amount of tariffs, the willingness. I think we have seen a Trump put, so-called, by the market. And so I think that these companies that were directly in the line of fire because of their imports of like, where's apparel made? It's not made in the US. We're in the line of fire. And I think since then they've benefited. And meanwhile, the existing core company was, as I said, doing well. They were winning in the marketplace, opening new stores, having really nice store comps, good margins, and such forth.
So you mentioned that you were largely services or area, not necessarily goods, is the point, pre-April 2nd.
Right.
And then you went into goods, actually, when you had that opportunity. Or
yes.
got bulked up.
Not massively, but a little bit. And it's
more.
helped the portfolio since, sure.
So on the services side of things, let's talk a little bit about some of that position, because I think when we caught up last time, that was largely what you were leaning into. So are you taking us into, is it financial services? Is this more on sort of the communication side of things? Take us into a little bit of what's in the portfolio high level.
Yeah, so definitely in the communication side of things, in both the media streaming in terms of both like sort of TV streaming, movie streaming, as well as like music streaming, as well as like digital ads, and also technology. I would include software, businesses like that. And so, like stocks got crushed, right? And I think there was also a view that the consumer would roll over, and there would be a terrible recession. And look, I mean, the jury's still out on that, but I would say that I think people would think it's not going to be as bad today, or the outlook is much better than it was certainly 2 months ago. And for some of these companies that weren't impacted, I also bought more of them because I really like them, and they've done well. And so for example, one of my top 10 positions is the largest streaming company in the world in terms of like movies and TV, and I've owned it. I think I've owned it for two years, maybe a little bit longer than 2 years. And I think that there was a great opportunity to buy this company in 2022 when the stock really got crushed. Since then, they've had two very nice growth arcs in terms of eliminating password sharing, as well as adding advertising.
Gee, I wonder what the company is.
Yeah, and I think it adds so much value.
But people don't cut their streaming even in a recession, right?
No, I think they probably have more time to watch. I think you got to do something.
Yeah, you got to.
And so and I think it's a really incredible value, right? And so I think that like if you compare what's the price of your streaming subscription to cable, I think it's a good value. If you're buying 10 of them, it's probably not. But if you're buying one or two, it probably is. And as a result, they've been able to increase the price because they look and see what's consumer engagement, how much are consumers watching. The average consumer watches like 2 hours of Netflix a day or something like that. So they've been able to raise price, they've been able to get subscriptions, the background's less competitive, margins are going up.
So tell us a little bit about this fund a bit, because we know it's North American equity. Does that mean you need to either choose, from your perspective, do you need to kind of lean one way or the other? Presumably you have a mix of both, but to what extent do you have a mix of both Canada and the US?
Yeah, so the fund, when we started it, we started it 10 years ago. It'll be this October, so it's going to approach its 10-year anniversary.
You've got a happy anniversary coming here.
Yes,
okay.
Yes. And
Fantastic.
So when we structured the fund, we structured it as giving it flexibility, but with a benchmark of 70% US and 30% Canada.
Okay.
So I'd say as of today, it's pretty close to that. It's 66% US and 34% Canadian. The Canadian portion, I wouldn't think of that as like 34% of a Canadian fund. I would think of that as the best of Canada. And so think about Canada, right? And I think...
So you're not owning everything in Canada, sort of evening it out in that sense. Like
no.
Having a bit of everything.
And, I think there's a big misconception globally and within Canada in what Canada is. Like, what's Canada? When people think about Canada, if I go to the US and I tell my American friends, what's Canada? They think of energy, they think of mining, they think of banks. That's what they think of, right?
Syrup.
But yeah, exactly, right? And but what's been winning in the Canadian market? What's been working? It's the quality compounders, right? Those are the types of companies that I'm trying to own, not only in Canada but in the US, and that's what I own, right? So Constellation Software is in the top 10. It's been a big holding since for a long time. I think since the inception of the fund.
Oh, really?
And so
that's interesting.
And there's other companies like that, like in engineering services, for example, right, where it's like good organic growth. They're able to deploy capital accretively by buying in-market competitors and grow cash flow. There's waste management companies that are very, very resilient when you have a recession or inflation. They've been able to grow their free cash flow very nicely. Yeah, there's the information services companies. So there's a lot of different areas. There's the grocers, the dollar stores. There's a lot of good businesses within Canada that people don't think of necessarily.
So I don't hear, now you also manage natural resources, and I'm not hearing a lot of natural resources in what you just said.
Yeah, so I think within natural resources, I do run the Global Natural Resource Fund with my colleague, Joe, over to Vest. He runs the energy. He's done a great job. He's a fantastic resource. He's a pun.
Yeah.
And
he won't mind.
And no. And but within resources, I think you got to dream the dream. And so by that, I mean, you got to invest where there's price appreciation on the commodities.
So not oil right now.
Yeah, so I would say that like for the North American Equity Fund, less than 1% of the fund is in the energy sector.
Okay.
And that includes uranium. So it's even like less than 1%.
Oh, good. I'm so glad you brought that up because there's some headlines around that. Okay, tell us how you're positioned, but then I want to ask you about kind of the future.
Yeah, sure. So I was going to say, in short, it's mostly gold, then copper, then uranium than energy. But it's pretty small. Like it's less than 1% in uranium and energy.
Right.
The materials would be bigger, but the mining portion is a few percent. And it was mostly in gold. Gold's actually done really well. I know you want to move on, but gold, like I was looking at commodities, right? Since like the last sort of peak was like after the Russia-Ukraine war kind of started in sort of mid 2022. And I think gold was around $2,000 an ounce then, and now it's like it's like 3,300 an ounce. Yeah. Whereas I think oil went from like 120 to low 60s, and copper's kind of remained about flat-ish. It's a little bit under $5 a pound since then. So just to provide some context, but I think you wanted to drill down on uranium or nuclear, given maybe today's.
Yeah, no, I'm delighted to hear. I mean, do you think central bank buying has a lot to do with the gold story?
Yes.
Yeah.
Yes, I do.
Yeah.
I think that
yes.
I think that like post the Russia-Ukraine war, I think that foreign countries really wanted to diversify their financial reserves away from the U.S. dollar, and gold has been a big beneficiary of that.
Okay, fantastic. Yeah, I do also. So, and is the gold story for you in terms of investments mostly Canadian?
Yes.
Yes. I like how direct you are. I think that's very good. Yes, indeed. Tell us a little bit about the nuclear story, because there are headlines today. For some time it's been swirling that the hyperscalers would like nuclear power to be what they just plug into for the data centers to power AI, basically. And we've been hearing about that. But there's actually material announcements being made today of companies that are nuclear companies, hyperscalers, linking up, doing deals. This has been a trend that you've been either watching or actually generally involved in. I mean, you've talked about this before, I think.
That's right. And so, yes, you're right. I think like there's the AI story, which we all know about, and it's very sort of compute and power intensive. And so as a result, I think that the hyperscalers require more power, and they require consistent baseload power, which nuclear does provide.
Which wind
cheaply.
And others don't. Is that sort of the idea?
Exactly. Yeah. I think the renewable ones struggle there. And so for nuclear, I think it's low carbon, it's cheap, but it's CapEx intensive to start, certainly. And so I think as a result, yes, I'm bullish on uranium. I mentioned that I own some uranium in the fund, which is the baseload power for nuclear. I'm also interested in nuclear services. It's hard to find pure plays in this area. One of the Canadian companies I own that does engineering services has it's not the core business, but it's a decent part of their business in nuclear services, and they're absolutely killing it. They're absolutely crushing it in terms of backlog growth, revenue growth in this business, and so that's been like a nice little win for one of the portfolio companies that I own. But it's an area I'm looking at, and I do think that there's other reasons to think that the power capacity needs to go up in terms of reshoring of manufacturing into the U.S. And general renewables growth, electric vehicles, things like that.
Right. And Canada's so cold. Good for the data centers, right?
Benefits copper a little bit too.
Yeah. Okay. From the ground, in the ground, digging into the ground to the skies, you have for some time, I think, been invested in aerospace. Again, we hear kind of anecdotally that things like travel and air travel have taken hits in certain parts of that area. It sometimes gets linked to the sentiment and the consumer story, how everyone feels healthy or unhealthy in that area. What do you like about aerospace? It obviously, it's going to do another bad pun, like rises above all of those stories. But genuinely, like, what do you like about aerospace right now?
Yeah. So one of the ways I think you can win in investing, and that I try to win in investing, when I look for, and I like to say I want high quality compounders, is I want to find unregulated monopoly businesses.
Okay. And go to aerospace.
I think parts of aerospace are that, right? Whether it's the parts where the FAA regulates the parts and there's only a certain number of companies that are allowed to make those parts, or it's the services, which tends to be the aftermarket services, which tend to be very sticky. So I think you can find that in aerospace. I also really like the secular growth profile. You mentioned like travel may or may not be taking a little bit of a hit right now, but I think secularly the trend is once people start flying on an airplane, they want to do it, they want to travel, and if you look at that Maslow's hierarchy of needs, travel's at the top, right? Once people attain a certain wealth level, so people want to travel more. So I think there's going to be continued growth in travel, not cyclically, but secularly over time. The other area of growth here is that I think the OEMs, Boeing and Airbus, are behind, need to increase production.
Right.
And then that's good for the whole sort of ecosystem. So I think there's really nice growth opportunities here. And then idiosyncratically, we try to pick the best companies for the fund within that. And I own two aerospace companies, and they've both been really, really nice
Contributors.
provider of returns to the fund this year and last year.
Does the falling US dollar support the case to currency hedge for Canadian investors, as sort of a broad question? And then maybe you can talk about it in the portfolio, how you handle that.
Yeah, I certainly don't want to make a career as a forecaster of currencies. I think that's really hard. But look, I mean, I kind of think that US dollars down a lot, I think, to start this year. I think versus the Canadian dollar, it's down 5% roughly, and
Right.
more certainly against like the euro or other major currencies. So I think it's come off a fair bit. So I don't want to make a call here to like hedge it or not hedge it, but generally over time, I think the US dollar has been less cyclical, which I kind of like, as that means that it smooths the volatility in the fund over time. Not to the start of this year, but I think generally over the past 10 years of running the fund.
Okay.
So no, I think I'd rather, I don't want to like make
a call on that.
Forecasting
it's more
currencies
sort
here,
of,
but I'm not bearish on the US
you're
dollar.
not bearish on the US dollar. Okay, good to know for Canadian investors. Any thoughts on silver? So actually you mentioned copper. We talked about some of the precious metals, but silver often will follow gold, for instance.
Yeah, I mean, I generally think of silver as like the younger brother of gold, and it's much higher sort of beta. And so when people get really bullish on gold, they start to look at the gold to silver ratio. And when people get very bullish, they think that it should be like 1/50th of the price of gold. So I like silver, but it's harder to invest directly in silver. And usually when you own gold companies, you get some silver that comes along with it, depending on the company and the mine. So that's sort of, if you are, it's sort of, yeah, it's not a focus, but I do own some silver along with the gold companies. So often, I think in the past we've discussed that there actually isn't a lot of turnover in your fund, but it has been kind of an extraordinary 6 months. So we started out talking a little bit about what April represented to that. What would you say to answer that question? Like, turnover is not something that you have a lot of, but it's been a strange year. Yeah, I mean, I'm not I have some natural turnover every year, and I think that's healthy. And I think for me, that represents, ideally, it represents harvesting those ideas that have worked out and provided nice returns and putting it in some better areas. And so an example I can give of that, I mentioned that I bought two retailers, or one of them I added to, and one of them I bought in the fund in April. And so you have to sell something, because I'm typically fully invested, because I think stocks go up over time. So I think it makes sense to be fully invested. And so I sold stuff that had been more defensive and that had held up really well. And so, I mean, that's really generally the story of, generally like where I want to go. So, I mean, so that was in areas of consumer staples. And I think I took a little bit of profits in gold as well, but I continue to like gold. In terms of diversification, this has been, I mean, it's always a term that gets mentioned, but diversification so far this year actually has meant things like going international. It's actually taken on a slightly new, and we're kind of discussing what's leadership. Is that shifting? Is it changing? It's hard to know. It actually looks like tech's doing very well, which had been leadership before anyway. But just speak to diversification, what your fund offers, how you think about diversification within the fund, and for investors who might want to hold it, who do hold it, what do they need to know you're thinking about on diversification? Yeah, so I own approximately 50 stocks in the fund, and the top 10 positions are approximately 40% of the fund. So I think that I like that level of diversification. You don't want to be too diversified, or you can't. How can you beat the market over time? You won't. And so you want to have some. So I think I'm enough. As I mentioned before, I'm 66% in the U.S., 34% in Canada. You kind of mentioned the U.S. Yeah, the U.S. has kind of lagged this year, but it's done really well over the course of the fund. I think that's going to continue. I'm not worried about that. Look, I think the U.S. has many of the most innovative companies in the world. I think that's going to continue. If you look at U.S. companies, they have, I think, the highest return on capital and some of the highest return of capital through dividends and share buybacks. So I continue to like the U.S. as a place to invest. I think it'll do well, and like it's definitely proven more volatile lately. And I think I hope that'll continue to provide opportunity.
Okay, interesting. If you are, we can't maybe look back and write the history books yet, but are there aspects to what went on in April in terms of the market reaction, in terms of how investors fled, shifted, went back into the market that you might comment on? Like, how would you put some of what we saw in terms of a massive tariff story that rocked the markets into context for investors? Like, how do you look at that?
I think investors were, including myself, were caught off guard by the magnitude, the breadth, and the time of implementation of the tariff. And I think as a result, like you definitely had strong selling, right? And so, and probably some panic.
Right.
And so,
and the administration itself, that's what they chose to do. How do we write about that when the time comes?
Well, I guess we're going to see. I mean, I think you could say, like, I think there are some bulls that have the theory that you have the new president coming in, blaming the last president for the weakness in the early part of the year, and then we'll pivot to growth policies like lower taxes, less regulation by the end of this year, which sets the economy and the stock market up to be on a high for next year's midterm elections, right? I mean, I think that second quarter, like the economy is not falling off a cliff, right? If you look at like the second quarter Atlanta GDP now Fed forecast, it's over 4% for the second quarter. So I think people got very negative, and that provided some opportunities. And it pays to keep in mind that over time, the economy, earnings power, and stocks go up.
Right. Don't panic.
Yeah.
Right. Other sectors, we've talked about aerospace, we've talked a little bit about natural resources in various areas there. And a sector that often has been called evergreen, and I don't know if you think it is healthcare. Healthcare is actually a fascinating area right now because you've got sort of a drug story, which is maybe transformational. We're not sure yet. Do you like areas of healthcare? Maybe not the drug area, but broadly speaking, are there some interesting areas for you there?
I'm invested in med tech, medical technology.
Okay.
And in my top 10 is Boston Scientific. So that's my major holding in healthcare. I like healthcare. I think there's an aging population, so demographics are favorable. I think that often within healthcare, you can find very interesting new product stories. And I think it had a really good setup after 22 and 23 and 22. You had like inflation, and they got upside down, meaning inflation rose higher than prices, and so that was an opportunity to recover both cost and pricing. And then in 2023, you had the GLP-1 drugs just absolutely crushing the rest of healthcare because the view was everyone's going to be on GLP-1s. There'll be no more need for any other cookies, areas within healthcare. And so if you look since that sort of like summer, fall of 2023, I think that the GLP-1 drug stories like Lilly have done well, but I think some of the stocks that were crushed like Boston Scientific have done better because they went down because of that, and since they've had the opportunity to rebound nicely.
That was a really interesting time because it was sort of thought that this will be, a bit of a savior situation for all aspects of the economy, and even people won't buy as much at the grocery store. There are lots of tangents to that story.
I remember that.
Yeah, I bet you do. I'm sure you were watching it very closely. We mentioned some of the headlines that are coming out today. You commented on sort of nuclear hyperscalers, that connection. Do you put that all, again, I'm taking you back to sectors when you really want to pick stocks and not maybe talk about sectors, but into a changing industrial landscape? I mean, it seems sort of unquestionable that we are walking into a slightly new industrial period. How would you either describe it or invest in it? Might be an easier question. I don't know.
On the industrial side, so we've talked about aerospace, we've talked about nuclear services. Two other key areas are engineering services. And so one of the companies actually is primarily an engineering services company with a nuclear services business, but I own two companies there. And I think within Canada, the engineering services companies have been high quality compounders, right? Like really nice organic growth, not as cyclical as people or the market tends to think. Good margins, and they've been really skilled at deploying capital, buying sort of smaller mom and pop companies and growing their cash flow over time. I think in waste management as well, that's been another good area. I think Canada's done very well. There's been two companies in Canada that have done well. in that area, and like it's absolutely like recession resistant, right? I still got to pick up the garbage. Inflation resistant because the price is indexed to inflation for a good portion of the business, with really nice free cash flow growth. So yeah, I think there's a lot of opportunities in industrials. I think some of the harder hit areas of industrials, the fund has avoided largely, not fully, but generally has done very well overall in the industrial portfolio.
When you're looking at Canada and the US, which you do all the time, I'm kind of curious, again, in this particular moment where, it seems like we're trying to do more on our own in Canada, be less dependent on the US. I don't know to what extent that narrative holds going forward, but it's interesting that you don't have to choose. You've said that before. You can invest in both. But maybe just bring us up to date on, again, does it mean if we're not as connected in terms of trade that changes your fund in any way? Do you look at them as more separate entities rather than selling to one another? Has that shifted at all this year?
Not really. I'm a bottom-up investor, so I look at the micro, not really the macro. But in terms of what you said for Canada, I like that, right? I like that the new Prime Minister tends to be more growth focused than the last one, which seemed to be agnostic towards the growth, like economic growth of the company.
Yeah. Country, yeah. Maybe run it like a company. That'd be good. Well, yeah, I was trying to get you to say kitchen sink when talking about the administration earlier in the U.S. But
I saw that in one report that I read, whereby someone was bullish, saying, "Hey, maybe the new president in the U.S. is like a CEO that comes in and absolutely kitchen sinks the quarter, takes the stock down, and then when things rebound, takes credit for it, and they're able to blame the kitchen sink on the prior management team." And like you are seeing some of that, right? And so maybe that's the case. We'll see.
Maybe that's kind of how
we will have midterm elections next year, where they will be under a lot of pressure if the economy and stock market are in the tank.
Yeah. So there's between now and then. Really interesting to catch up with you at this point and to hear what you've been doing in the fund. If you had a final message for investors, what would you like it to be?
I guess one, I'm really focused on this fund. I'm really focused on owning high quality compounders. I think they're resilient. They're good companies. They'll grow over time. Performance has been good. I'm a large owner of the fund, so I'm well aligned with the shareholders. And like for those that are invested in my funds, the Fidelity North American Equity Fund, Fidelity Canadian Balanced Fund, or Fidelity Global Natural Resource Fund, like thank you very much. Like I really am very grateful, and I'm trying my absolute hardest.
Okay, it's a delight to see you as always, Darren Lekkerkerker. Thanks for joining us in studio.
Thank you.
Thanks for listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.